This conference will now be recorded.
Good evening, ladies and gentlemen. This is Clueless Trading Frank. It's approximately 9:06 p.m. China market should be opening any minute. We have the Yuan fix, the renminbi, that's the Chinese currency, which is part of this whole market fallout. That the fix, meaning the peg against the US dollar, will be coming through in the next couple of minutes. I'll certainly be updating you guys. Bloomberg is on the background, as it always is. Bloomberg Financial News. They are the most current with all the breaking news and everything related to, especially these macroeconomic factors. And I have that in the background, so sorry about the little background noise. So again, let me start. Good evening, ladies and gentlemen. This is Clueless Trading Frank, 9:07 p.m., 5th of August, 2019. Monumental week in the market. Actually started last week. And this session will be recorded, uploaded to the Google YouTube channel for further viewing by all members, free trial subscribers, and anyone out there with the internet connection who'd really like to know what the heck is going on. These are pretty very, very serious matters. I'll try to attempt to explain them in a very simple way for all my loyal members, so they are well connected and well prepared to face whatever comes our way. On that note, we will begin this full disclosure. This is purely for financial education, not for any solicitation or advice. And as I mentioned to you, we are going to be, any minute now, we are going to get the number for the Yuan renminbi, that's the Chinese currency peg against the US dollar. It has shot up over 7, which is basically a danger sign, because it shows the Chinese government is letting the Yuan rise against the US dollar, or I should say weaken against the US dollar. That's why it's rising over 7. And that is considered to be currency manipulation. As we all know, on the breaking news that came about, I think around 5:30 or so, that which I put out there. And behind you, by the way, you're seeing the live futures. We were down about 46, I believe, down to 27.75. Right now, we are at 28.08. So we have jumped up from the bottom roughly 32 points. You can see that. Excuse me. Throat is a little bit dry. We have jumped up approximately 32 handles. 32, yeah, 24 and 3, about 27 handles on the E-minis. Might look pretty small on the charts, but that's a pretty big jump. That's 27 S&P points if you want to look at it that way. And this is where we were at the close. At 4, this was the drop when the US went ahead and retaliated against the Chinese yuan rising, and China putting a stop to buying all agricultural products. So this is a tit-for-tat, full-scale, gunfight, and out there in Dodge City. And so we went and named them as a currency manipulator, which is a very, very serious. It's like putting somebody on the terrorist list. How about that? So they're sort of a currency terrorist, currency manipulator. It is something that countries, when they do that, especially when the US does that, that means we can take some pretty preemptive measures against a particular country. And the US has basically labeled them as a currency manipulator. We haven't done that. I think last time it was done was during the Clinton administration. I can't remember that. But if you remember, a couple of months ago, the Trump administration and Secretary Mnuchin decided against naming China as a currency manipulator. But tonight we did it. So that's a drop in the futures. You see that. So we dropped dramatically. We were down from the close, I believe, 46 points. We have now gained back 27 of that. And the futures are right now down about 28 points or so, as far as I can see here on my screen. So that's where we are. So I don't want to get into what's happening right now in a nutshell is macroeconomic warfare, okay? And this is basically what economic warfare is all about. President Trump went ahead on, what was it, Thursday? Yeah, the day after the Fed meeting, that sudden tweet that they're going to basically slap a 10% tariff on the remainder of the $3 billion worth of Chinese imports. We talked about that on the Sunday webinar, which was last night. And that propagated a response from China. They basically said no more buying agricultural goods, and that's serious stuff, because the largest market known to man and humankind when it comes to agricultural goods coming from our heartland is China, and that pushed China to basically say, that's it, till we progress with our talks, we're not going to buy any agricultural goods. All right, so hardcore stuff. So that they want weaken against the US dollar. That makes what it basically does is this: it makes Chinese goods cheaper. I'm sorry, yeah, it makes Chinese goods cheaper and makes so basically that helps them with all these tariff costs that they are bearing on, and we're bearing too, by the way, on. So when you and it makes them, basically allows them to sell more at a cheaper price. So it helps them to lower their tariffs. I'm going to put out a very significant, detailed article out there. Please read through it. It's not that complicated, but once you read it, I think you guys will understand. So the Chinese yuan, the peg is going to come through any minute. It closed at, you can see that on your iPhone too, under CNY/USD on investing.com. And it was at 7.02. That's quite a rise from the 6.5 level versus the US dollar. That's versus the US dollar, okay? So $1 US, 7.02 as of today, was so it's rising. In other words, it's weakening against the US dollar. So they're getting a artificial currency advantage in lowering the price of their goods on a real dollar term basis, and that is considered to be currency manipulation. So it's an unfair advantage in the broad world of exports and imports. So that's the reason why the US went ahead and slapped them as a currency manipulator. Very drastic step, and that came about tonight at around 6 p.m. So again, I'm not here to give you a full-scale Princeton or Harvard economics lesson. I'm just telling you the simple stuff of what's going on. So the renminbi was roughly around 6.5, 6 in about, within the past year. So now it's, shot up. That means it's weakened substantially versus the US dollar. Anyway, so this is basically economic warfare. We are, and I really hope, and I'm sure it's the hope of all of you, that we know what we're doing, and they better know what they're doing, because weakening their currency does not do much for them either. Yes, it helps with their export prices and stuff, but it also, when you devalue a currency of a nation, people tend to move out of that currency and try to put it into a currency that's stronger. So a lot of Chinese billionaires and millionaires are exchanging Chinese yuan into the US dollar for safety. Okay? Now, who's Biggie Smalls? Somebody called Biggie Smalls walked in. Hey, that's a great name, by the way. Can you introduce yourself, please? Hello? Okay, fine. So bottom line is that this also crimps, it creates an outflow of the Chinese currency out of the country, because the billionaires can move their money through different means. You can do that. And wow, futures jumped big. Stronger than 7. All right, that's great. Futures are right now jumping. They're only down about 14. We were down 46. The peg just came through. It's at 7.09. It's lower. The US dollar right now is stronger against the Chinese yuan. The Chinese yuan right now has dropped This is fantastic. Futures are down about 15 or 16. China sets one fixed stronger than the 7 US dollar, opposing currency drop. Okay, so the Chinese at this point are intervening in their markets to prop up their yuan, which was weakening against the US dollar, which caused this huge drop in our markets today. We were down, what, almost 1,000 points at one point. And this is big stuff, all right? Let me just hear this out for a quick second. And Biggie Smalls, can you just let us know who you are? So the headline breaking right now is China sets yuan fixed stronger than the 7 versus the US dollar, opposing currency drop. All right, so that's good news. That is going to appease the hawks in the Trump administration, aka Peter Navarro, who is basically an all-time China hater. And he's got some good points too. Futures are only down 12. You can see what's going on. You can see that here. And this is going to appease some of the concerns of the Trump administration. And I believe this could be the start of something good. The US dollar is also strengthening right now against the Japanese yuan. So this is all good overall. That's all you need to know. All right. And let's take a look on the futures chart. And Biggie Smalls, I'm still waiting for you. To me, this is exciting stuff, guys. All right. It's like the Netflix show, The Action. I just started watching it, all about gambling and poker and sports betting. This is the real world. All right. This is the real world, guys. Okay. So let's bring in the futures chart here, and we are in. Well, that's the retest of the 150-day moving average on the static S&P 500 as of the close today. But let's look at the actual futures. So futures basically right now is creating a a hammer reversal. You can see that. 1 second. This is real time, so get a little bit excited. Nice. We have a hammer reversal right here, which should turn green if it continues this way, unless we get enough more hardcore comments out of the Chinese state media or something. So far, we have gained back 30 handles on the E-minis, 30 S&P points, if you want to look at it that way, just within the past hour. Oh, hi, Richard. How are you? No problem. Just type it in. That's great. All right. So this reversal hammer is shaping up. You can clearly see here that these charts were drawn to maximum perfection as to where we might get to. This is your major support at 2730. That's your red line here, right there. Right there. We have, I gotta get this. Screens are blinking all over. All my screens are blinking crazy. Okay. We had lost the 150-day moving average. We had closed slightly above that. We had dropped very sharply down to about 27.76. We're at 28.12. Futures are down about 17 right now. You can see the live action going on. And hopefully we can reclaim back the rising 150-day moving average, which is a significant moving average used primarily by hardcore hedge funds to look at long-term trends in the market. Let's keep in mind that this is not the first time we have lost the 150-day moving average. We had lost it here back in March. We had lost it here for a day or so back in June 3rd. These were monumental buying opportunities. Keep it in mind, all right? Monumental buying opportunities. I'm going to go out there and say that if this one fix is going to go and we don't get an escalation of more hardcore comments out of China or the Trump administration by tomorrow morning, we could possibly be up 400 to 500 points, bar none. Okay, will happen just like that. Okay, there is significant short covering that can happen, but we shall see. So bottom line is that if we can reclaim back the 150 moving average, this was your big breakout line that I kept on showing. The blow-by-blow movements on the market were explained, shown very clearly today, all day long. Highly suggest if you want to know a little bit about how to trade these markets, or not even trade the markets, but learn how the real world operates, in the world of finance, in the world of Wall Street, in the world of global markets, then you better go through my Twitter feed. Otherwise, you're going to be as stupid as you were the day before, and that applies to me too, because I always try to be a little less stupid every day. But if you want to remain stupid and not know what's going on, and you think, oh, everything's just going to be all peachy, and oh, things are going to go up in a straight line, up or down, then you're just going to keep on doing the same stupid thing you've been doing for years and years. So please, let's not do that. This could be a monumental buying opportunity, similar to June 3rd, similar to March, what was that? Similar to March 8th. Now, I did cover a whole bunch of this stuff on yesterday's Sunday weekend webinar. So I don't want to rehash the same things, but I'm just going to show you that at this point, and we're going to look at the internals in a minute. This is not rocket science. You all can understand it very clearly, that we could possibly have a significant bounce. I'm not saying we're going to go back to the top. That there's been significant damage done on the externals. From here, you can clearly see that in the form of these candles. This was when the markets were recovering very nicely on Thursday till we got slammed by Donald's tweet. And this was Friday. We actually came back above the 50-day moving average. This was today. A 965-point drop, and then we closed down 767. These are not things that occur every day, okay? This happened once in a while. The last time this type of stuff happened was back on December, which was a generational buying opportunity. You could have made millions and millions of dollars, or at least thousands of dollars, if not more. I shouldn't say millions, unless you want to put in a lot of money. You could have, yes. But if you put in a small amount of money, you could have made thousands and thousands of dollars just in the following weeks and months. So will it be one of those? I don't know yet. But I do know that there's going to be a significant short covering bounce if we can basically de-escalate the situation regarding the Yuan fix, which we have so far, and we can de-escalate a little bit of the hostility that's generating from both sides, mind you, and on the U.S.-China trade war. Things were randomly sold today. Every single sector was down. We had a 10-to-1 down day, and it's simple to understand. 10 stocks were down for one up. I mean, that's like capitulation at its best. So every single time this type of happens, I mean every single time, you generally tend to get a sharp short covering bounce within the next 24 to 48 hours. Will it be different this time? Maybe. But technically speaking, no. It'll be the same pattern. So if you want to make a crap load of money, you better understand what's going on. You better put in a little bit of money. You better buy some selective stocks, or buy the SPY, or the QQQ, or the DIA, which is a diamond, the Dow Jones DIA diamond ETF. They're known as diamonds, Dow Jones diamonds, and make some money. Now, that's basically it. Because last time when this happened back on December 24th, I know only a select group of my traders who made a fortune. Majority of them, nope. Okay? So why don't you be in the select elite few of traders instead of being the majority of the ones who don't? Think about that for a minute. So bottom line is, that's where we are right now. All right? Now, we have moved significantly on a standard deviation basis below the 34 of the 50-day moving average. So there is going to be mean reversion. It will happen. This is not the end of the world. This is hardcore escalation of an economic trade war. Now, one or the other, both sides, China from the economic side, us from the economic and political side, need some sort of minor resolution. You don't like it? You don't think it's going to happen? Well, you don't know what the heck's going on then. I'll be just straightforward and tell you guys that, okay? So, saying all that, this is where we are. Let's take a quick look at the internals, and we can see that we are truly, whichever way you slice it or dice it, significantly oversold. Now, you don't need to be a rocket scientist to figure out that when we start to get these crossovers or this rounded bottoms on the full stochastics on the dailies that you get a significant bounce. Might last a day, might last 7 hours, might last 2 days, might last 3 days. In this case, and on June 3rd, it lasted 1, 2, 3, 4, 5 days before we had 3 days of a minor pullback before it started again. So about, oh, it turned green. It turned green. Guys, see that? It turned green. Futures are only down 12. This is really good stuff. All right, guys. And as a trader, doesn't matter where you are, how old you are, how young you are, how much money you're trading with, you need to get excited. Excitement and passion leads to success in every profession in the world. I don't need to tell you that, okay? I am your kindergarten teacher. So the bottom line is it turned green. Now it's slightly red. Futures are down about 15. But once it starts to turn, let's go back to the internals. Once it starts to turn, then you get a multi-day type of rally. And that is what is starting to happen right now. Now, let's take a look at the McClellan oscillator, which was very interesting because this was down to minus. At one point, it was down to minus 273. I drew some lines here based on previous comparables where the market had sold off hard and then turned. The most the markets had sold off, which reminds me of this, to be honest with you, was the sell-off that took about 2 weeks, then went up, and then another 2 weeks, and this one just happened. Bang. One week. Just get it done with. I've always said this from day one. And I've seen enough of these sell-offs. I've seen enough of the ramp-ups to explain it on a technical fashion. Is the more faster and the more furious, the more violent and the more ugly they are, you're going to get an equal and opposite reaction to a large degree. Anyone tells you otherwise, they're bullshit. Okay? Now, unless we get into, I repeat, the caveat to all this technical stuff is, and the bounces and the pattern symmetry and all that stuff is, the caveat is that we ramp up more sanctions and escalation and tariffs and God knows what tariffs we can put on China anymore. But let's say, we ban their companies for coming public here, or we do some other stuff. Put sanctions on specific Chinese companies like Huawei, the big 5G conglomerate telecommunications company. Barring that type of escalation within the next 24 to 48 hours, we will get this bounce. Now, if those type of things happen, we're not going to get it. We're going to slip lower. That's it. So this was definitely out of control. These were the last couple of times where we got on the McClellan oscillator, the New York Stock Exchange McClellan oscillator. There was a bottom, June 3rd. Here was one that was March 8th. Just showing you the correlation. There. Now we're here and there. Okay? So if you just purely look at it from a technical standpoint, this was obviously the December 24th massacre. This was much larger, the drop in between trying to basically regain some points and then slipping and sliding. This oversold condition was monumental. It was minus 300. And there's still a possibility we get there for reasons that I just explained to you all. That if we keep on escalating and they keep on escalating the trade war within the next 24 to 48 hours or 72 hours, then we are going to get minus 300. And at that point, it would be a significant, this is significant buying opportunity to start with right now, but that would basically where we get to. So we shall see. So that's pretty much it for the E-minis. 1 second. Now we're going to switch charts here. This is where we are right now. Futures down 20. Remember, there's a lot of activity going on in Globex markets right now. Asia was down huge at the open. Okay, and was down huge. 1 second. Richard, we have this new free trial member. I think he's from overseas. Bear with me 1 second, guys. Trying to multitask here. Hey, Richard, your last name isn't Park, right? You can type it in. Richard Park is not Biggie Smalls, is it? I don't think your last name was Park. Oh, it is? Okay, so you're the new free trial member? Because I thought you were a different Richard. That's why I got mixed up. Give me 1 second, guys. I need to talk to this gentleman. Okay, and you're not following the Twitter feed because you don't have Twitter, so how the heck do you know what we're doing? So what's the purpose of even doing a free trial when you don't even know what we're doing? I sent you an email on that. Richard, use your brains a little bit, all right? We try to help everybody here. All my content, as it's sent on the welcome email, is delivered on the real-time Twitter feed. I also asked you to create a Twitter account so that at least you're connected and see what's coming through. Because aside from that, there's no purpose of you doing a free trial because you don't know what the heck we're doing during the day. Okay? I mean, it's plain and simple. I mean, use your common sense, my friend. You don't even know what alerts we're doing, why we're making money on Roku in the middle of a 900-point drop, you know, and things like that. So it takes you 3 seconds to open up a Twitter account and then send a follow request to Clueless8RT. That's all instructions are put on the welcome email. Aside from that, there's no purpose of you waste your time to do a free trial. Did you understand what I said? Just say yes or no so I can continue with my webinar. Okay, it's okay, made 93K tomorrow, blah, blah, blah. Okay, great. You know, was very buying puts. Good for you. All right. So if you made 93K, you don't need my help. All right. But congratulations if you really did that, because we don't like throwing around numbers on people because we're not a bunch of kids here. All right. So whether you made 93K or 9,300 is none of our business. Just keep that in mind. Okay, I'm throwing you out because you're being a real pain in the butt. This guy seems to be a real jerk, guys. I apologize. So I am going to go ahead 1 second. Just bear with me. You get all these real characters here. Okay, apologize on that, guys. Jody, Adam, looked like some jerky boy came into our thing here and trying to show off with numbers and stuff. And then he types in, no, it was actually 91,000 instead of busy buying puts. So anyway, sorry about that. Are you guys still connected? Adam, Jody, Mike, sorry about the distraction.
Yeah, I'm here.
Yeah. I'm just telling you, man, we get some real characters once in a while. Okay, so let's move on. So the bottom line is that there's going to be a lot of volatility, obviously, because of the technical damage that was done. I hope that some of you kept some of those VIX calls on the those did extremely well. Those were the ones that were well, the original ones were 90 cents. They went to $10. I didn't have those anymore. I had switched over to the 19 calls. I still had a bunch of them left, as I had said last week, and those ones went from roughly 80 cents to about 450. You know, wish there were a lot more, but that's still a significant move on that on those VIX calls. Here's a quick reminder to everyone else who will be listening to this. These tactical charts that I put out there, all right, they have levels, they show the breakdowns, they're showing you where you can bounce from, and then on these kind of wild days, they basically just slice through, hold on a little bit on those support levels, and go through. Use them to your benefit. Use them to your benefit. In other words, you don't have to wait for me to buy a put here and there. I did a lot of fast trades today. okay? But on a day like today, I'm not going to put that up on a blow-by-blow basis because the markets are so volatile, all right? So feel free, and many members do that. Buy your puts if you're seeing those breakdown happen, and these are the charts that what we're trading off. You're seeing that break happen below the below these support levels. I am putting down the support levels and all that stuff, telling you where they can go, where they cannot go. So use it to your advantage. You don't always have to be. Remember, we're not a trading service where you're mirroring exactly. 1 second, please. 1 second. Apologize for that. This Biggie Small is it's some sort of spammer, so I need to get him out. So anyway, so the bottom line is that feel free to use those charts to your benefit and just do what you need to do. We're not a mirroring service. I'll suggest a few things, take it or leave it, whatever the case may be. You're not mirroring my book, and I'm not mirroring your book. So the bottom line is that feel free to take advantage, and these charts are there for your benefit so you can do what you need to do with them. Whether you short, whether you go long, you have to always go with your gut feeling, then look at my stuff and use it to your advantage. Just want to make that clear, because a lot of people think like, oh, he's not putting out the alert, so I can't do anything. No, because I'm not running your book, your trading book, and you're not running my trading book, certainly. So so just feel free to do what you need to do. So key is that couple of things. These are the same stuff. This was the last time the market turned from these levels on the internals, where the falling wedge, which we had called 2 days before, and then the market took off. That was June 3rd. I still have this line and on my radar. That's 27.23. And I don't believe we actually got there today. We went here, and this is where we are right now. So this level here at the 27.20 level would be pretty substantial, and would be the lows generated on June 3rd. So do keep that in mind. Do keep that in mind, because we are at 28.10, so 29.20. I mean, that's another 90 points or so lower. So 90 times 7, you're looking at another 600 points on the Dow. And believe me, these days, when these type of circumstances, with the currency war and a trade war, all kinds of stuff, you can certainly get a 600-point drop, as we clearly have seen many times, can happen rather quickly. So this move here is another roughly 600 points. All right. So can we get there? Hey, I'm not writing anything off. So feel free to, when I'm showing these charts and you're looking at your own screens, feel free to keep that in mind. This major support level. That was the March one. Actually, we did hit that. What am I talking about? I think we hit that. Let me see on the hourly chart. No, we hit 27.78. That's the most that we got down to. 27.78, not 27.20. Okay. So bottom line is that this level is still on my radar. Can happen. Okay. Right there. Can happen. These are showing extreme oversold conditions. I don't want to keep on repeating the same thing again. And if we do get a sharp bounce, it'll pretty much bounce. I'm not saying it's going to go all the way to the top, over 80 RSI, but it can very well bounce towards this 40-50 level where it broke down from, and on the stochastics, and that would be good for at least 300 to 500 points. I would say, yeah, 300 to 500 points on the Dow. So that would be pretty big. That'd be pretty big. Okay, so that's it. So really not much to show here. Everything is just screaming extreme oversold. Extreme oversold doesn't mean you all of a sudden just turn around, but it normally happens within 24 to 72 hours or 24 to 48 hours. And nowadays it happens very, very quickly. All I know is that when I'm looking at my, and this is really important, this is the weekly chart of the E-minis, right? And Adam, you as a futures trader, you'll appreciate this. So bottom line is that you have the lower Bollinger right here at that 28.10 level, 28.76 level. And guess what? We went to 27.76 or 27.78. We actually hit this level almost. You can see that tonight. This still is pointing down. Now keep in mind that the bottoms normally occur on the red candle prior to the reversal here. There. Okay? You can slip and slide tomorrow, which we certainly will. Futures are still down 19. Just keep it in mind. And then when the reversal happens, it generally starts to happen from the lower V. Okay? Right there. So if we use the same format, then by tomorrow morning, we should be down here if we open down 20 S&P handles. And then there should be a bounce, which should take us to where we were trying to hold for a good portion of the day. And that was around the 2,900 level right there. Or yesterday, we're trying to hold that. That's your breakout level. Remember that. This green line was a major breakout level there. This one, see that? This goes all the way back to 2018. Now, these are really important because this gives us an idea of where the markets are trying to find a footing and where they can lose their footing. So bottom line is this line here is at 28.85. You can clearly see that. And if we do get a very sharp recovery bounce, we will at least come back and retest that and then possibly pull back a little bit. I can't really predict what's going to happen. Okay. If the stochastics keep on turning higher, then you get these massive multi-week type of runs for at least a couple of weeks. And those are the ones that 99.9% of traders sit around and miss. For those, you need to buy time. You can buy something. I like to roll out. So I'll buy a week out and then I'll roll out as the strikes, as it moves higher. I'll move the strikes higher. Or you can buy them 2 weeks out and not take a look at it. You can do it either way. However, the internals have to cooperate. Let me mute the Bloomberg right now. Apologize. People have asked me, so how do I really make the money on these big macro moves? It's simple. You buy time, whether it's 2 weeks or 3 weeks. Just use your own judgment. I normally buy it a week out and I roll the strikes out. That's my method of doing it. So I have more control over that. Or you can buy 2 weeks out and then you just basically just leave it in there. However, markets being so volatile, I don't know, even with the stochastics turning higher, if it does, whether or not we're going to get a multi-week continuation pattern. So it's common sense that I buy it a week out and then I'll control it more. I'll buy higher strikes and move it in there. And I can control my profits as we get up towards these levels. Now, whether or not this is going to happen, I have no idea. But I can tell you we're at the lower Bollinger. This was a major breakout level right here. You can see that. We attempted to break out of this 1, 2, 3 weeks in a row. And on the 4th week in March, we broke out over this neckline. Remember, this was a very large inverse head and shoulder, right? So that neckline is where we slipped through today. That's the neckline we are trying to get over. First level of contact will be around 29.09. If we bust a move over that, then the next level of contact will be around 29.44. Any questions on this? Because this is where you can make some really substantial money, but of course we got to keep an eye on things. Barring any further major escalation of this U.S.-China trade war, we can get a substantial bounce which can mimic this, and this. Any questions, please? Adam, Jody, Mike?
No.
None. Okay. All right. So that's really where we are. We are still. There is nothing in this world saying, are we out of the woods? That's for kids. Are we out of the woods? Like, what is this? We're Red Riding Hood, like going around out of the woods. That's you hear that a lot in the media. So that's all garbage. We're never out of the woods when you're a tactical trader. We're always in the woods and we're making money as we move along. Okay. And there is never going to be a hugs and kisses. We all thought there might be, right? Between Trump and Premier Xi. It doesn't look likely. But you never know. This is a high level game of poker. $1.5 trillion were wiped out of global markets and our markets. I think we lost $1 trillion. It's not a joke. You think it doesn't affect the US consumer? It doesn't affect the US psyche? Sure it does. Please. All right? So tariff or no tariff, Donald is watching. And he's not liking the reaction of the markets. The markets are the ultimate determinant. We're not a political animal here as traders. We are here to make money, politics aside. So the fact is that if the markets are sending a serious signal, then he will listen. There's no question about it. All right? Because the people he's going to run against on the elections are going to love it if the markets are on their knees. Simple, right? It's not going to let that happen. So that's pretty much it. I don't know what else to, this was what happened on the daily. This is a different looking chart. This is your big breakout level. This was a serious macro breakout. And lo and behold, this is actual S&P 500, by the way. So this is not moving with the E-minis. We came and I showed you guys this before. We came and we touched that. It's not magic, all right? This is not magic. This is just pure technical precision on the charts. And what I simply do is look at the supply demand things on some of these charts, and I'll go ahead and draw the lines. And you can see how amazingly close they are. This tail, let me move this shaded area. I just showed that because of, just to get people focused on previous occurrences when this has happened. Look what it did. It came as close as it can to the major breakout line level right here. And that's what it did at the close. So if things work out and the markets decide that there is a large, there is a substantial short cover. Shorts, remember, shorts need to cover in order to take their profits. Just the way longs need to sell in order to take their profits. It looks lovely on your P&L, but the markets can take that away in a second, right? We all know that. We're doing fantastic overall till Thursday. Then comes the famous Donald tweet, and everything goes haywire. In between that, yeah, we made some serious trades, but I'm talking in general. So for shorts, it's the same thing. This one renminbi fix, which is now being positively viewed in the currency markets, lessening the fear of a full-scale currency war, the shorts, just like the longs, have to cover to lock in their profits, make it into real money. Your P&L is not real money. That's just fictitious money that can be taken away in a heartbeat. We know that. So the shorts do the same thing. It's simple common sense, but a lot of people don't realize that. So the bottom line is that there's your gap. And that gap would bring us over into this multi-month since last December, this trend line, and that trend line on the S&P is above 2906, 2907, around that level, right? So once you enter that, you could get a pretty substantial bounce to the next major breakout level, which is 2955. Now, simple thing, but I've seen this happen over and over again. I know I talked about this last night, but I want to remind everyone. I have never, I shouldn't say never, but I have very seldom, and that's why I wanted to highlight this to you guys, okay? That's why I put these little, little shaded circles for everyone to understand. You fall out of the Bollinger like this. Here you fell out of the Bollinger for a day. Here we fell out of the Bollinger for 2 days, very similar to this. You have to, from a technical standpoint, you cannot stay out of the Bollinger Band on a overshoot higher, which you really don't see that often, but on an overshoot lower, you can't stay out of the Bollinger for more than 48 hours. You will at least attempt to get back into it. The Bollinger Bands are here, these two blue lines, right? The ribbons. So you are going to make a move, at least attempt to get in. Maybe you fail and you slip lower because by that time the Bollingers will be stretched down further. But looking at it here, you have a pretty substantial move to at least try to get back into the Bollinger Bands. Does everyone understand that? And that is a significant tactical scalping opportunity, which might be for a day or 2 days. Is that clear to everybody? Because
Yes.
okay, you do not stay. I repeat, you cannot stay from a mathematical and a tactical, technical perspective. You cannot stay outside the Bollinger for more than 48 hours. It has never happened. Never. Last time we fell out of the Bollinger was here in May. We fell out of it for a day. We didn't actually fall out. We fell out of it and went in again on the same day. We fell out of it back during the huge drop in October of 2018. Within 2 days, we're back inside it, and it failed again. It could very well happen like that. Just because it re-enters the Bollinger doesn't mean it's going to go up to the upper Bollinger. No, it could fail. But this move alone is a couple of hundred Dow points and a significant tactical profit, whether it's a day or 2 days on your SPYs or the overall market. Let's take a look at the VIX, what the VIX is doing, or the VIX futures are doing. Let's see. So as you can see very clearly, we have a inverted hammer of a pretty significant level on the VIX. So let's try to draw this out. And this is giving us the first inclinations that we might be getting, or a good probability, a very sharp reflex bounce within the next 24 to 48 hours, or even if it lasts for a couple of hours during the day, depending on how fast the market moves. Okay, so this is definitively, from a technical candlestick pattern, a large inverted hammer, a long tail inverted hammer, not large inverted hammer, my apologies, right there. The last time we saw one was off the 21 level, came down really hard for 2 days. That means the market rallied too hard for 2 days back on May 13, and then it rose very sharply. So that means on the third day, the market fell. Remember, the VIX is the contrarian opposite indicator, inversely proportional to movements on the market. Markets higher, VIX lower, VIX lower, markets higher. So this is what is happening now as we speak. It's telling us that with futures down 18, there should be a relief rally that carries through the Asian markets as shorts cover, carries through into the European markets when they open around 4 or 5 in the morning, right? And hopefully spills into our markets tomorrow morning. However, there is a significant amount of margin calls, both retail, primarily institutional, that has been generated because of the significant drop in the market. We were down almost 1,000 points today, and about 1,500 some points just within the past 2 or 3 days. So obviously, these margin calls have to be satisfied. That's the reason why markets can open, pop, and then drop really hard. Because somebody has to sell a bunch of stock in order to come up with the margin money, the margin call. So that's known as a forced sellout. That's why you see intense volatility on a bottoming process. The market could be substantially higher a week from now. But the first day after a bounce, as the markets open, the sooner the margin calls get satisfied, I mean the forced sellouts happen, the better off the longs can, because there won't be staggered sells along the way. Do you guys understand what I just said? If the margin calls are not satisfied, Jody, then as the markets move higher, there will be waves of selling, which will simply be very frustrating for anyone who took some nice positions to it at the lower end of the market. So we want to see how fast we can drop first thing in the morning. That's the forced sellout between 9 and 10:30, 9:30 and 10:30, and then you should expect to see a bounce. If the market pops open big tomorrow morning, there will be inevitably a sell program that will hit the market between 9:45 and 10 a.m. Has to happen, because those margin calls need to be satisfied. They don't disappear in thin air. The margin clerks, institutional margin clerks, are not selling $1,000 worth of stuff. They're selling 100,000, 500,000. I'm not going to say a billion, but 500,000, a million, 10 million, 20 million blocks of worth of stocks. So between 9:45 and 10 a.m., you should expect to see a sharp drop in the market if we open sharply higher. Okay? And if we open lower, then you should expect to see a push lower before the market turns at around 10:30 a.m. So exercise patience, look at my charts as they come through, look at your own screen, use your best judgment, and put out some nice, buy some time. Let's look at the internals, how they're moving, as I explained to you. This process is not something, I'm not reinventing the wheel. I'm simply looking to see the last climactic sell-offs, which started happening, by the way, since 2018, recent memory, right? These big 6, 7, 800, 1,000 point drops. We didn't used to see things like that before, but the machines make it happen right away. So I look at the pattern. It's embedded in my brain. I myself have sold things a little bit too early. I've learned my lesson. I'm not going to go ahead and make short-term mistakes. If this is a significant turn, it'll start to show its face within the next 48 hours. And we want to ride that wave in a big way. And that's basically it. Adam, any questions?
No, not at this time. I'm just
Okay.
just watching and waiting.
What was that, sir?
I'm just watching and waiting.
Okay, but don't watch and wait too long, because the machines are much faster than you and me. They'll just move things a lot faster if you just, but this watching and waiting certainly is a good strategy given where we are right now, but don't be like sitting back too much. The way I do it, which has worked very well for me, I always take my initial position, and as it basically, goes back and forth and it finds that level, because when the movements start, those 200-point move that we got from being down 950 plus points to being down 700 points at one point took literally 10 minutes.
Yeah.
Exactly.
I bought some SPY calls today. And
yeah,
they're
so the best.
They're down like 80% already. So.
Yeah,
it was a small position, but I was trying to.
Perfect.
Start to
start
a
to
little
build
bit.
on it, because one of the things that, it's a very good point you brought out, Adam. Appreciate you mentioning that. So the key is, first of all, the dollar cost average. You got to do that. Number two is the fact that if somebody doesn't have a position, as a human being, our brains are not tied in with that. In other words, you got to have, you got to be in it to win it, and you got to have a few pennies in the game, right? So the best way to engage in these phenomenal moves that happen in the market, whether it's on the short side or the long side, and now we're going to be looking at the long side, is to have some engagement with it. That means you buy something, and that's the only way you will be forced to look at it, and that'll help you react to it better. So excellent point you brought up. Thanks, Adam. So this is Roku. These are for stock guys. All right, Roku's looking pretty damn good. This is picture perfect. Here's your uptrend line. The stock was down, as I'd mentioned yesterday's webinar, to about 96, 97. It's exactly where it went. Now, I said that because I was just looking at the uptrend line, explained all that to you guys yesterday. By the end of the day, stock was 102 and 7. Those calls that I bought at around the Roku calls, the 106s, I bought at around 6. They closed at almost 7.5. They went to almost $8. Fine. I didn't add any more. I said, okay, let me wait. And so this is a good looking chart. And I believe there is a pretty strong short position. I'll find that out tomorrow on Roku. Stock looks good, highly volatile. I've explained, what might happen. We can go to 90. We can go as low as the 80 level, which is the big 77.56, as I explained. But given Roku's action today, it was very encouraging to see how powerful the stock held out on the face of a market down almost 1,000 points, and with all techs being smashed, right? So this has to be taken into account. If it follows the channel, the stock's good for a 113, 120. If it follows the lines, so far so good. It's cooperating, but the action of Roku today was very, very encouraging, and one must take that into account, and I showed that quite a few times. The other one, stock guys, are Grubhub. So Grubhub is very oversold. Looking at it from a standpoint of what it did today, it pretty much did nothing. It just stayed there, give or take, 60 cents, 70 cents. The low for the stock was 66.78. The high was 69. Not bad. That's a $3, that's a $3 range on a day that the markets had one of their worst days of 2019, or the worst day of 2019. But so far so good. Stock looks good on a swing basis. This is Grub I'm looking at. I'm sorry. So Grubhub still has room to move, but this cup and handle needs to resolve itself above. If it does get a move, it can go to $80, which it did, and then it pulled back. There's your handle. So Grub, if it really starts to make a move, the stock can go to 90. So this is a swing play. You can buy some calls a month out, 2 months out, and just sit on it. Maybe you want to buy some strikes way out of the money. Maybe you can buy some 80s. Maybe you can buy 90. But you have to give yourself time. But so far, it also handled itself pretty good. Any questions, Jody? Any particular stock that you want me to quickly look at before I wrap up?
How about Google? I noticed that it's filled its gap from
Yeah.
earnings
So
now.
so when at times like this, these stocks are the first ones which get smashed, right? So reading the technical mark on these stocks becomes very difficult, because they're Google, Amazon, Netflix, Apple, all these big ones. They get used as ATM machines. They're the first ones that the funds sell in order to come up with the money to handle the other thing. So, and I know you've heard this before, and I've explained this to you guys before too. So let's take a look at Google's daily chart. On any type of bounce in the market, Google will be up a gazillion points. So I bought a very limited amount of Google calls, right, which I put out there. My cost basis is in the mid 7s. It closed at around 850. or 844, I have a trading stop of 3 points because of the volatility. Okay, so that's the way I play it. I personally like this chart a lot because what it did on a daily is quite easy to read. Number one, it's super oversold. The McClellan's at minus 234. I mean, that's like, whoa. Now somebody says, oh, why Google? Well, it's not just Google. If somebody says something like that, they should never be in the market because everything was down, right? So it wasn't just Google. So Google came and tested the 34, tested the 150, and was doing fine for if we didn't get that. This was just a consolidation channel, but then things went haywire today, right? So bottom line is, this is positive. I like the hammer. I like the pattern. It is still within the uptrend channel, right? It is still within the uptrend channel right there. There's your uptrend channel. This was the big earnings gap. I believe it will enter that uptrend channel. I believe Google can get towards the 1200 level, which is the upper end of this channel before it hits another major resistance. Stocks like this on any day that we are up hard, which is going to happen within 24 to 48 hours, barring any major escalation. Keep on repeating that, okay? You will see the stock up $20 to $30. So you have to be obviously positioned prior to that. So overall, Google's chart is it's a very technical chart. And as I said, bounced off beautifully over 34, over the 150-day moving average, attempted to enter the bull flag or consolidation channel, couldn't do it. The high for Google was 1176. So right here, I believe on a move up on the market or these reflex bounces, Google will get to about 1200. Did that answer your question?
Yes.
Good. Now, the other thing that I find with these stocks are that when they move, they're very sweet, but options are not cheap, right? The options are not cheap. So on a sharp move up, regardless of if it runs furthermore, you might want to put, I use trailing stops. So let them take it away from me as long as I made some money. So that's the best way to do it. Because these options, 1200 is 30 points from here. What am I saying? 30, 70 points from here. And the calls, and I bought the August, I bought the August 16th. I didn't do it for this week, even though it might happen this week. So I paid up a little bit more. So I apologize. So if you buy this week's one on expecting a sharp reflex bounce, at least 1 or 2 days during this week in the market, then obviously those are going to cost a lot less. So they might be a better bet. But I bought time on the August 16th. That's the reason why I paid 7 plus change. The August, I'll just let you know what the ones for this week are, because this week is, we could, like I said, we're going to get some sort of significant bounce, hopefully, based on everything I've said, at least 1 or 2 days this week. So you could very well make a decent sum. The 1200 calls, if you want to look out that far, because based on this chart here, this is a swing chart. That's why I gave myself 2 weeks. You understand that part, right?
Yes.
Yeah. So because it's a swing play, I gave myself some swing time till the 16th. So so the ones for this month, for this week, August 9th, the 1200 is only $3. And the biggest volume was on the 1200 calls. They had 334 open interest and 1272 traded today. So if you want to buy a little closer to the money, let's say, no, I don't want to, maybe it doesn't get to 1200. So you said, no, I want to buy $30 out. So out of the money, $30 out on, what did Google close at? 1 second. Google closed at 1133. Okay. So 1133. So 1133. If you want to look at the 1150s, which you're going to get there faster, look how expensive they are. Holy cow. They're 20 bucks. Forget about it. So 1160s are 16. 1170s are 12. 1180s are 8. So like I said, the calls are expensive. But like I said, when it moves, these babies can give you a double, at least 150%. We've done that quite often. So if you want to play with small amounts of money, those would be the best bet, betting that the market will have at least 1 to 2 days of a very sharp reflex bounce before it attempts to sell off again. So that's basically it. All right, guys. So explained a bunch of stuff. Keep your fingers crossed. We are living in extremely volatile times. This is not the first time. It's the same playbook every single time. Just letting you know. This happened faster and quicker. So flip it on the other end. Look at the glass half full. The faster and quicker markets reset on a daily and weekly basis, the better of it is that you're going to get the best prices for a quick, sharp reflex bounce. And then, based on the charts, we see what happens. Have a great evening. God bless you all. See you guys tomorrow.